friends, I'm Rina. Welcome to my first video. In this video, I'm going to talk through one of the most important principles of accounting. It's about understanding the accounting basic equation and how to make a journal. Now, let's have a look at the accounting basic equation. The key principle behind the accounting basic equation is that what the business owns is equal to what that the business owes. Debit side equal to credit side. Assets are equal to liability plus equity. Now, let's have a look at profit in the basic accounting equation. When a business makes a profit and return it, the equity will increase. When a business makes loss, the equity will decrease in the same period. Always remember that equity will increase with a profit and decrease with a loss. The profit is reflected in the accounting equation as asset equals to liability plus equity plus profit. Profit is accounted as revenue minus expenses. So what is the new accounting equations once revenue and expenses are included? It is asset equal to liability plus equity plus revenue minus expenses. Now, we will go through some examples using this new equation. Have a look at the illustration in this slide to understand when is a journal a debit entry or a credit entry. If the expense shown as the -5 in red is moved from the credit side to debit side, it will become a +5 on the debit side. The -5 in red represent the credit side of the journal and the +5 represent the debit. In this slide, you can see from the previous slide the +5 in red we discussed, representing the debit side of the journal. The debit and credit side remain balanced as they always will, and the equation can be written as seen on the next slide. So, we can see that the expense represented by the red A has increased as a result of the debit. On the credit side, there has been a corresponding decrease as a result of the credit. This slide, we are going to discuss second examples. Please see red A, 1 and 6. If liability and equity and revenue are moved from the credit to debit side, +8, 1 and 6 become -8, 1 and -6. And the debit and credit side remain balanced. So, liability, equity, and revenue decrease or negative when they are in debit side, and increase or positive when they are in the credit side. After this, we are going to discuss some exercise and journal. My friends will be helping me to explain to you.
Thank you, Rina. That was great. Now, let's have a look at some exercises and a journal. Journal number 1. If I, as an owner of a business, invest $10,000 of my own equity into this business, the impact will be a debit for cash as it increases. Equity also will increase by $10,000. Thus, the journal will be debit the asset cash, $10,000, and credit owner's equity, $10,000. This is shown in the journal here. Now, for another exercise and journal. If I borrow $1,000 from the bank and put it in my bank account, the cash at bank will increase, and my liability to the bank will also increase. Therefore, the journal will be debit, cash at bank, $1,000, credit, liability, the bank loan, $1,000. Here is another exercise and journal. If I make $5,000 in revenue, this will increase cash, meaning there will be a debit for the cash. On the other side, revenue will be a credit. Therefore, the journal will be debit the asset cash, $5,000, credit revenue, $5,000. Here we have an exercise and journal for an expense. When I pay salaries of $500, this has the effect of increasing expenses, which in turn decreases cash in order to pay for the salaries. The expense account salaries will be debited, and on the other side, the cash account will be credited. The journal will be debit salary expenses, $500, credit cash, the asset account, $500.
Now, for the conclusion, the accounting basic equation can also be referred to as the balancing equation. The balancing equation represents the relationship between asset, liabilities, and equity. By working with the equation, the total debit will always equal the total credit. Thank you. Hi, if you have any suggestion for topic you would like me to cover, let me know in the comment. Thank you.